Hello everyone, this is Chinmay from Trading Cafe India. Well guys, if you're wondering, today I'm not getting any setup to trade, especially on Nifty and Bank Nifty. And most of the time, entire day, the markets were very choppy on both the directions. So if you're frustrated because of this factor that I'm not getting any setup, well, it's perfectly fine to keep yourself away from the market on such days. Why? Why exactly this particular day? Well, as we all know, the Fed meeting is about to end and the policy outcome will come anytime in US market. Now, this particular announcement is going to make a huge impact on the markets, not just on US market, but on the global markets and even on our Indian markets as well. So why this Fed meeting is actually making a lot of sense and why because of that policy, we are going to get the next direction to the market. Again, in such events, what are the things that you can do along with the options and how to make better understanding along with the option trading in events? I'm going to discuss in this particular video. So the video is coming up a lot of learnings and observation. Make sure you're going to like this video. And if you're not yet subscribed to the channel, make sure you're going to subscribe to the channel. Now guys, on daily time frame, markets are near one important support zone. That is somewhere near 15,700 zone. Well, at moment, why this particular zone is very much important, and more than that, if a news is about to come, then we are actually into a making or breaking scenario where we are going to get the next direction. Well, then why this particular Fed meeting is making more sense? Well, if you know, in financial market, Fed meetings are actually very important events, and these events are actually giving us a next move direction. Well, talking about the current scenario, talking about the inflation, well, it's a key concern for all the markets. And to get it into control, Fed comes up with the policies such as the rate hikes. Now, everyone is expecting somewhere around 75 bps rate hike. Now, if that is happening, markets will well within that limit because whatever announcement will happen, it is already priced in. But anything above that will definitely going to create a huge pressure on financial markets, as it is definitely going to halt the growth of the markets for some time. So definitely we are going to see a huge reaction from the markets. So a day before an event, if you start trading, what we are doing, we're actually speculating whether the markets are going up or down based on the news or looking at the price action. But a day before event, definitely markets gives you such choppy conditions where the direction is not clear. So as soon as the policy comes out, markets start moving here and there madly, and that actually ruins the game of risk reward ratio. So even as a buyer or as a seller, we are not going to get a very good risk reward ratio out of it. So what is the better thing to do? Definitely we wait for one day, and as soon as the announcement happen and market takes a firm direction, maybe after first half an hour tomorrow, we may enter into the markets along with one directional trade, and at that time we can definitely engage along with the option trading. So what are the changes that you need to observe along with the option that I'm going to explain you in detail? Now guys, again coming back to the 5-minute time frame on Nifty, well, as you can see, as soon as market open, it started showing us a random moves here and there, and finally it is closing near day's low, and the day low is actually near year's low as well. Well, 15,700 is a proven support again and again on the market on a high time frame, and now we are near that crucial level. Well, at this point, if I start tracking all the ATM call option and put option, now I'm talking about 15,700 call option and put option. What are the things that you will observe? Let's see. Now guys, first we are looking into the 15,700 call option, that is at the money call option. Well, as we know, markets were having huge volatility, and finally it came near the day's low and the closing happened there only. So it is obvious that call option will start reducing its premium, and it also closed near the day's low. Well, now let's understand about the put option. At the money put option, that is 15,700 put option. Well, as we all know, market closes near day's low, so it started rising, and the close is also happened near day's high. As you can see, this was the high earlier made in the first half, and we are closing near the day's high. But interestingly, tomorrow we are having expiry. So on expiry, generally out of the money call option and put option, they start reducing their premium. Well, here's the surprise. Now, guys, we are looking into the far out of the money put option. I'm talking about 15,200 put option. Well, it is well over 500 point away from the current market. But if you look at the put option premium, well, at the end, from this 4 rupee, it become 10 rupee. That means, well over 2x move happened in that particular option. Now, if you're wondering, even 500 point away option, which have a very good chance that it will close out of the money, that means worthless, still it is rising, and it is rising very rapidly. So you will come to know what kind of impact this Fed meeting is making on options, as well as there's a suspense in this particular Fed meeting policy, and the outcome is definitely going to make an impact on the entire option chain. Especially on the put side, it will start showing you this Vega effect. Well, I've explained you this Vega effect earlier also in my previous video. Whenever markets are uncertain and any big news is about to come, VIX starts rising, and because of that, because of Vega, we will get higher premiums, especially on the put side, and that exactly happened here. So no matter what, if tomorrow markets are opening well within the range, what will happen? All these out of the money call option, put option, they will start rapidly losing their premiums, and we are going to get a very good theta decay. But before that, if the markets are about to open along with a huge gap up or gap down, we don't know which particular direction it will move. So definitely the chances are very good that we are going to lose our money. So that's why in the start itself, I have explained you, if you're not taking any trade on such days, it is perfectly fine. There are few days when missing the trade is perfectly fine. Again, guys, we are not here in the markets to do any gamble. Rather, once the market will start showing you the clear direction, well, that will definitely happen after the first half an hour. So after that, if you are getting any continuation in the same direction, either on upside or downside, at that moment we can definitely enter along with the option trading. Well, if you're going to do option buying, you can prefer to trade along with the next expiry option, where you will get a nice move, and that too along with a very good premium. Rather, if you start trading on the same expiry, chances are very high that you are going to lose the premium very quickly. Well, again, guys, every day we do this option chain analysis. Every day we do this price action analysis, and above the day's high, below the day's low, we start looking into the opportunities. Today on Nifty and Bank Nifty both made insider candle, and that insider day was also very choppy on smaller time frame. Now, looking at the option chain, I'll give you some hints that you will get understanding about the option behavior. Because now talking about the price action opportunity, well, we are definitely going to wait for at least half an hour, as I've explained you. Let's understand on option chain what are the key changes that happen, and because of that, why we are not engaged along with the option buying today itself. Well, guys, now we are looking into the option chain of Nifty. Well, here, if you look at both call and put side, and especially if you start observing this particular factor, this particular column, I'm talking about implied volatility. Now, you will definitely see a huge rise in this particular implied volatility. Well, you can think about this particular strike, that is 17,500. Well, previous day, that is on Tuesday closing, ATM put was trading along with the 26 IV. Today itself, we are seeing a huge rise in this particular implied volatility. Well, as I've explained you, implied volatility is directly proportional to the option prices. That means if the IV is going high, prices are going up only. Well, so if you are today trading along with the higher premiums, and if you are an option buyer, and tomorrow if the markets are about to open flat, what will happen? Now you are going to lose a huge along with the theta decay, that is number one. And if the IV cool off happens, you're going to lose the premium along with the Vega effect as well. Again, I'm telling you, there are some days when if you're not trading along with the option, it is perfectly fine. You need to recognize all those days when you're not going to be an option buyer. And if you're getting the logic behind it, definitely your option understanding will start improving. I hope in this particular video, you're getting the clarity about the given concept. Again, if you're still having some doubts about the option pricing and its behavior, definitely you can write down all your queries in the comment box. Again, I'm not going to give you any stocks for tomorrow's trading, as the day will definitely become very much volatile. Again, tomorrow also, if you want to trade, you can go along with very much cautiousness. That is along with the small quantity. That is the only thing going to make sense along with the new traders. I hope in this particular video, you're getting a lot of valuable content. If that is the case, do like this video, share this video along with your friends and subscribe to our YouTube channel.